Hi everyone, I'm Matt from Looking to Bitcoin, and today we're going to be looking at whether we're currently in a bear market rally. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now I'm just here on the Bitcoin Investor Tool, or the 2-year moving average multiplier here on lookintobitcoin.com. And if we just zoom in on the current price section, we can see we've actually had a fairly good few months, really. Basically for all of 2023, we've had majoritively positive price action, and especially as I film this, the previous few days have been rather exceptional, to be honest. We've bounced up from beneath $25,000 and are currently above $30,000, which is very nice to see indeed. But a lot of people are currently asking, is this just a bear market rally? And if you weren't already aware, we define a bear market rally as just a temporary move to the upside before further downside price action. It's usually just a pause in the bear cycle before the bear cycle ultimately continues and takes us to even lower lows. So a bear market rally would point and suggest to the fact that even though we have bounced up over 100% from the lows we've set, we would eventually come back down to even lower than our previous low at around $15,000. Now, of course, this is a possibility. We have to acknowledge that really anything can happen. We're going to look at a few metrics that maybe support this argument and some that maybe don't agree with this argument, and maybe suggest that the bear cycle is actually over and we're potentially in a transitionary period into the new bull cycle. So as I said, right now we're just on the Bitcoin Investor Tool, and this really maybe does suggest that this could still in theory be a bear market rally, really until we break above this green line, which is a 2-year moving average of the Bitcoin price action. We really can't say for certain that we have convincingly commenced the new bull cycle. Throughout all of Bitcoin's price history, being beneath this green line really opens the door to accumulation, but doesn't necessarily mean there won't be further downside. We can see here in every previous cycle we spent a prolonged period of time beneath this, and especially in the cycle such as the 2015 bear cycle, we actually, if we just zoom in a little bit, came up to this 2-year moving average and came back down fairly substantially. Now, of course, this wasn't a bear market rally per se. We didn't go on to make even lower lows, but until we convincingly break above this moving average, we still do have to be aware that it is a possibility that we could reject from this line, move down, and potentially reach lower lows. This line currently sits at around $32,000, nearly $33,000. So it'll be interesting to see over the coming weeks and potentially months if we can convincingly break above this line and really solidify the fact that the bear market really is over and this isn't a bear market rally. What we can do is look at a few metrics that maybe don't support this argument, that maybe can convince us that this is the start of a new bull cycle. One of these is the 1-year hodl wave. We can see here that this has continued to make new all-time highs almost non-stop since Bitcoin's price action bottomed at around $15,000 late in 2022. We can see now it's almost at 70%, which means that 69.27% of all Bitcoin has not moved in at least a 1-year period, which is rather startling, to be honest. It's a pretty impressive feat that nearly 70% of all Bitcoin on the network just hasn't moved in a year. There's only 30% of active Bitcoins being traded and invested at a semi-frequent basis, which is actually quite a bullish argument. It actually supports the fact that maybe the new bull cycle is only just starting to commence. And really, if we compare to previous cycles, such as again here in 2015, 2016, once this metric actually peaked, it really cemented the fact that we had started a new bull cycle. And again here in the 2018, 2019 bear cycle, it peaked, and probably the closest thing we have to resembling a bear market rally was when we actually bottomed out at around $3,000 in late 2018, ran up to about $14,000 before having another substantial retracement. Of course, this is quite majorly due to the COVID-19 pandemic, leading to almost all assets collapsing in their price value. But we can see as this 1-year hodl wave decreased, it signified that a new cycle had started before really increasing a little bit before we then once again bottomed out at around $3,800, I think it was. On this chart, it only shows the closing price, so you'll have to look on an exchange by exchange basis to see the wick lows on each day. But we can see again, after this rallied a little bit higher and peaked once more, it really signified that the bull market kicked off. So I don't think that this is really pointing towards that this is a bear market rally, because like we said, the only real example we have that could slightly resemble this is this in 2019, and we could see the 1-year hodl wave starting to decrease at this period, which we're not even close to seeing right now, people continue to hodl their Bitcoin, which really cements the fact that no one's really willing to sell their Bitcoin at these prices. And if we look at addresses containing 0.01 Bitcoin, this continues to reach new all-time highs on a crazy upwards trajectory. Same with 0.1 BTC wallets, same with 1 BTC wallets, and of course same with 10 BTC wallets, has climbed from around 155,000 to over 156,500 wallets containing at least 10 BTC. So it's very uncharacteristic of a bear market rally to see not only smaller retail wallets of just a fraction of a Bitcoin, but quite larger players accumulating at least 10 BTC to continue purchasing at these levels. It really doesn't suggest that people are wanting to take profits in anticipation of further downside price action, especially if we look at something like the whale shadows. And what I've just done here is removed the 10 plus years because it really excludes the previous cycles, just because Bitcoin hasn't really been around that long. So if we just look at the wallets of 7 to 9 year holding periods that monitors selling of at least 100 BTC, if you'd like a little bit more clarification on this metric, you can just come on Look Into Bitcoin and scroll down a little bit here. What we can see is during each of Bitcoin's cycles where maybe price action starts to get a little bit overheated, we can see these larger and more experienced players in the market start to sell Bitcoin. Once these whale shadows start occurring, it indicates that a lot of people potentially locking in profits because they maybe don't anticipate Bitcoin to continue increasing in price exponentially. And you can see this coincides quite nicely with the previous price action peaks we've had. And like we said, this somewhat anomalous price action we had in 2019, we could see a fair amount of selling going on by these larger players in the market. And if we look to right now, we can see almost no whales are taking profit at these levels. No one is anticipating further downside action, and everyone is hoping that Bitcoin price continues to increase substantially into the new bull cycle. But one other thing that maybe supports the fact that we could be in a bear market rally is if we look at some more traditional markets and macro data points, such as the yield curve. Now, if you weren't aware what the yield curve is, I've just loaded up an Investopedia article here. But just to simplify, it is when the short-term debt yields far exceeds the yields on a long-term debt, which basically means that those who are holding shorter-term debt, holding it for a shorter duration, are actually earning more for taking on this debt than those holding for a longer duration, which doesn't really make too much sense. So it's a pretty rare occurrence when we actually see this happening. And if we go onto a chart here on TradingView, we can see I've just loaded up the S&P 500 chart here. And what we can see is this red line is indicating the longer term debt yield, and this green line the short term debt yield. And we can see these squares occurring whenever the short term debt yields actually exceed the longer term debt yields, or the yield curve inverts. So we can see a lot of these have actually preceded large dumps in the market. So we could see here not too much of a retracement, but after this yield curve inversion, we did see a noticeable decrease in price. Same again here, this didn't last too long, but again, it did precede about a 15% monthly retracement in equity prices. But then the next two yield curve inversions were just as the dot-com bubble happened in early 2000s, before a rather large and drawn out recessionary period. And once again in 2008, just prior to the global financial crisis. So fairly notable inversions on the yield curve there. And once again, just prior to the COVID 2020 decline we saw. And if we just zoom in on price action, the yield curve has inverted fairly substantially and is actually continuing to grow. This divergence between yields on debts is quite an unusual thing to see, especially after a pretty long period of time, after we've already had this long drawn out period in equity markets. So this is leaving a lot of people potentially unsettled at the current state of the markets, because really it's hard to predict what may be coming when we're seeing a divergence between prices increasing yet the yield curve continuing to invert and not really showing any signs of reverting back to normality. So this is leaving a lot of people to potentially be on edge, predicting a future recession, and potentially thinking that all of the positive reactions we're seeing in investments and assets across the globe is potentially just a bear market rally. But this is something we'll just have to keep an eye on, because as we say, it's a pretty unpredictable period right now, and really we need to be more reactive than predictive in the markets. So just to summarize, looking at on-chain and market cycle metrics, we're not seeing any substantial evidence that our current move upwards from the lows is just a bear market rally. And given the lack of selling from Bitcoin's largest and most influential holders and the general increase in accumulation across the market, it's more than likely that we're in the early stages of a new bull cycle, or at least a transitionary period as we move from bear cycle into bull cycle. However, we can't be certain given the fact that we're still beneath the 2-year moving average, which has historically indicated a clear distinction between bear cycles and bull cycles, and there is still the looming murmurs of an upcoming global recession that likely limits Bitcoin's upside potential due to the fact traders and investors are still a little tentative on the state of the market. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live charts, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know in the comments down below and on social media, what are your thoughts on the market at the minute? Do you think this is just a bear market rally and we're due for even lower lows, or do you really believe that the new bull cycle has kicked off? Let me know. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.